Friday, September 20th. I hope everybody had a green day yesterday. And you know what yesterday was? Let's talk. The first thing we're going to talk about are dogs. This is my dog, Penny. You guys hear me yell at her all the time. If you're looking at the screen, if you're not looking at the screen, go and look at the first minute of the podcast, either on YouTube. It is a video podcast on Spotify, so you can see the video. But this is Penny. And Penny came to me 8 years ago. 8 years ago in 2000. It must have been 6 years ago, not 8 years ago. Why did I put 8? It was 2018. 2018. September 19th, 2018. In fact, it was 2 days or 3 days before I got my first Tesla, where I took delivery of the Model 3. So here's the story on Penny. I'll make it very quick for you. Penny, I found her on Pet Finder or one of those adoption sites, and her picture was kind of like this, where her eyes were just super, super cute. And I said, Daisy needs a friend, since my other dog, Johnny, had passed away a few years before, and she was getting a little bit lonely. Daisy doesn't play with dogs. So I said, let me see if I can find her somebody that she would like. So, and even when she went to boarding, she just doesn't play with dogs. So I emailed the person at 11 o'clock at night. They emailed me back at 11:30. I responded to them to the next day. They wanted to bring the dog over right away. I said, listen, I work. Can you bring him over at 4 o'clock? 3:30, the doorbell rings. Guy basically shows up with Penny. Doesn't speak much English. He's from Russia. And so I thought it was like a strange thing. Puts Penny down. Penny and Daisy immediately played. And that was when I knew that Daisy liked her, and I think she liked Daisy, but she was super, super scared. So she was kind of running away from Daisy, but still playing. And I turned around, guy's gone. Guy didn't take money. Guy didn't ask me questions. Nothing. Guy's gone. He's just gone. So I called the lady from the rescue organization. I said he left. So then I got the whole story. She was in a hoarder's house with 47 other dogs. She was known as little girl number 7. The guy saw my house. He saw Daisy, how happy Daisy was, how happy the two dogs were together. He didn't want me to say no, because they had 46 other dogs at home to take care of. So I was stuck with this little monster. So when you hear me yell at her, yes, she's annoying as hell. Yes, she's up in your face. Yes, if you come in my house, and I'm sorry for this word, she will fuck you up. Penny will fuck you up. She will bite your ankle. She will take care of you. She is the defender of the house, even though she's only 8 to 9 pounds. But she will fuck you up. So that's the story of Penny. Happy gotcha day to Penny. And it was a green day. And what did I have yesterday too? Everybody asked me, how do you find spaces? Well, here, this is Fed meeting. Okay, this is the recording. Now, this dude was on for 6 hours yesterday. I'm not going to, don't listen to the 6 hours of recording. If you want to listen to the entire spaces that I was on, it starts at the hour mark of 5 hours. Okay, I'm on at 5:45. And it's with a guy named Austin Hankowitz, who has I guess a top 5 podcast on Spotify. I don't know. Spotify tells me I might be just as big as he is. I don't know. He was great. I mean, he was just a fantastic host, and it was a great lineup. And I really appreciated him kind of telling me, hey, you deserve to be in this lineup as well, because I was pretty intimidated by some of the people in there. But it was good. It was a great one. I'll include this in the newsletter. And yes, the newsletter is free. So if you don't have the newsletter, you can get the newsletter for free. It's dailystockpick.substack.com. Any of the links. I got some questions yesterday from people. Where do I find all your stuff? It's here on Linktree, linktr.ee/dailystockpick. Okay. So if you want to go listen to that, I will post a link to this in the newsletter. You can go and listen to it. There is no video. Now let's take a look at some opportunities. Okay. I'm a large cap tech investor. So I will always look to large cap companies. I will look to the S&P 500. I will look to the NASDAQ. I will look to the Dow. Large cap is where I'm at. Okay, so I did this free scanner, and I'll include this in the newsletter as well. It's in Finviz. You don't have to subscribe to Finviz. You can look at Finviz. But what I wanted to look at is, okay, tell me all the stocks that in the S&P. You can change the index. You can go to the NASDAQ 100, okay? You can go to the Dow. Let's see if anybody in the Dow, okay? Yeah, there's Intel. And the only other criteria I put on here was you're trading below your 200-day and you're 50% or more below your 52-week high. Okay? 50% or more below your 52-week high. Now, obviously, Intel is down there. I would not invest in Intel. I just don't like it. Now, when we go to the NASDAQ 100, you've got Moderna, SMCI, and Dollar Tree. Of the four, I'd say SMCI poses an opportunity. I would say Dollar Tree, with the reduction in interest rates and the lower end has more money to spend, might be an opportunity for you to look at. Take a look at the chart if that interests you. Now, let's go to the S&P 500 because we can expand this out a little bit more. Albemarle, which is a specialty chemicals company. Okay, I like that one. Walgreens Boots, I wouldn't invest in that one. I don't go to Walgreens. Not a big fan at all. But this is how you can find it. And play with this 40. You can go to 40% or more below. Okay, you can see Dexcom. I think Dexcom has a chance to pop back up. Dollar General, same thing as Dollar Tree. Lamb Weston, if you're into guns, Lamb Weston. You can look at Paramount Global. Bath and Body Works. Again, somebody asked me about candles the other day. Bath and Body Works is down there. Micron is down there. Boeing is there. Humana, if you want managed healthcare. This one has gone the opposite direction of United Health. So play around with this if you're interested. But again, find something that allows you to find opportunities in stocks. You don't want to buy these stocks that are at 52-week highs unless they have more room to grow. And that's the key. That's the key. Here, Mag 7. Now, I left Tesla out of this, so it's the Mag 5. You got Apple, you got the S&P, you got Google, Amazon, Meta, and Microsoft. I would say the three down here, okay, this top line's Meta. Meta's the biggest gainer year to date. It's the only stock, okay, it's the only stock of the Mag 7 that was at all-time highs yesterday when the S&P hit all-time highs. Now, let's talk about some things that you don't want to do, okay? If you said back in March 2022, oh my God, the Fed is raising rates, I'm going to sell all my stuff, and I'm going to go to cash, okay? And I'm only going to get back into the market when the Fed starts reducing rates because that's the beginning of the bull market. Say you say that, okay? And that was your strategy. You missed out on 27% in QQQ, okay? Because March 2022 was when they started raising rates. And Wednesday, they started reducing rates. So you missed out on 27%. You may say, well, that's just because the NASDAQ and the tech stocks were booming. Well, let's go and look at the S&P because this is VOO. And so if you did this same thing in VOO, you missed out on 31%. I say this a lot. Time in the market beats timing the market. So don't think that you can time a catalyst and say, oh my God, I'm going to pull out here. Your pullout game ain't that good. Tyreek Hill's pullout game. Look at Mike McDaniel. It's not that good. He got 5 baby mamas. Don't think that your pullout game is that good either because you missed out on this. You can't time this downturn, but these downturns are times for you to add in. So I was asked, do we think that October is going to be a downturn? Well, if we look at the seasonality of VOO for the last 14 years, look at next week. You're going to have an opportunity to buy into next week. So this chart, you want to take a look, okay? The blue line, the S&P up 19%. What are the three stocks that are underperforming below that year to date? It's Apple, Microsoft, and Google. Okay, does Apple pose an opportunity? We can go in and we can look at Apple. I don't think it poses a huge opportunity unless you believe that there's an iPhone upgrade cycle. But at 34 times forward earnings, I think that's a little bit rich. I would wait for it. If for me, again, we're up near that $230 price point. What's the 52-week high? $237. Does it make sense for you to buy at $230 when the 52-week high is $237? Probably not, even though Wall Street says the price target is $238. I think it's going to get up there and it's going to pull back. At 230, I've said it before. I am looking to trim that stock. So let's go take a look at Microsoft. Wall Street says this one's a $501 stock. Let's look at the valuation of this one. 33 times forward earnings. Okay? That to me is a little bit expensive. But when I look at the PEG ratio of this one, it's a little bit more, absorbing at 1.7. Their growth is really, really good. So Microsoft, am I adding at 438? Let's look at the 52-week range. 468 is the high. I think you have more room to run on that one because you have Wall Street higher and you have the 52-week higher. So in my mind, if you're going to add one today, I think it'd be Microsoft. Now let's look at the other one, which is Google, which is underperforming, okay? 52-week range, it goes all the way up to 193. What does Wall Street say? Wall Street says it's worth 202. That's a 24% upside from here. Now, when you look at the valuation, it's less expensive than the other two. The PEG ratio is lower than the other two. So in my mind, I think Google is your best opportunity. That's how you look at these things. That's how you look at them. Again, only one of the Mag 7 hit a 52-week high yesterday, an all-time high, and that's Meta. The rest still aren't back to their all-time highs. So I would argue as well that, let's see. This is a good article. This lists the Mag 10. And so he's got 10 stocks in here, including Lilly, Broadcom, Berkshire, all of this stuff. And he argues, pointing out that we're heading into the most volatile 2 weeks historically. And I think the VIX wants to be around 20. That's me. He's saying IWM is the only indices that hasn't reached an all-time high. All the others have. So if you go and look at IWM, it hasn't. He's arguing that. It's a great article. I actually liked reading this article. You can take a look at it. I would argue that I think big gets bigger. And that's the way I'm looking at things. I think with the amount of money on the sidelines that's coming in from CDs and some of those money market accounts, where are they going to go? They ain't going into single stocks. They're not throwing into Palantir, which is 200 times earnings. They're going to throw it into the ETFs. They're going to throw it into VOO. They're going to throw it into SPY. They're going to go very safe. And what's the number one? You look at VOO. Okay, when they go into VOO and you look at the holdings, it's Apple, it's Microsoft, it's Nvidia, it's Amazon, it's Meta, it's Alphabet. That's your top stocks. That's going to drive those stocks higher. So I do think the big gets bigger. So take a look at that article. I thought it was really good. I think this article really pointed it out. Now, why do I like Apple? Even though it's 30 times earnings, take a look at this. And all you Google people will come at me and say, Google has all this, blah, blah, blah. The audio on Apple just makes its features so easy to use. For somebody who's not technically inclined like me, okay, I'm average at best. I consider myself average. For the 80 plus crowd, I'm a freaking expert. I am the man that when I walk in the room, everybody says, "How do you get your phone number switched from one provider to the other?" Yeah, I'm the expert at stuff like that for that crowd. For a normal crowd, I ain't no expert. Apple just makes it simple. So I like this one, and this is a great view of how it works. And that's why I really like this. So let's take a look at some charts now. Because we just said, hey, Google's cheap. Google's got an earnings gap. It's an interesting one, too. Because, I always say gaps need to be filled. Not always. But this one in particular, you've got an earnings gap up here all the way to 183. We talked about how the street has a $220 price target on this. How it's a huge upside. Look at the all-time high. It's at 192. You're trading at 163. I think as this 50-day starts to turn positive, I think this one's an opportunity. You're below the MACD oscillator. Your RSI is a bit high. It is at 63. But look at the weekly. The MACD has reset itself. The RSI is down at 49. It's coming off at 39. which is near oversold. I mean, the last time you were near that 39, the stock was trading at what, 88? Half the price that it is today? Are we resetting for this one to go significantly higher? Could be. I just used Gemini Live on the air. Somebody asked me what the quad witching day is. And I went on to Gemini, and look, my name's Gary. It's not Google. Google is far better at that stuff than I am. Just so you know, quad witching has to do with options and futures. I don't trade either. So, and on a Friday, I'm just kind of, my portfolio set up to adhere to it. I do think, and I've said this before, I think the VIX wants to be at 20. And so I do think that volatility probably will pick up. Are we getting back to that 60 level that we saw on August 5th? No. We're at 16 right now. I think the VIX wants to be at 20. So we probably do. But again, Trendspider points this out. Look at that trend line that we've broken. That downward trend line that we've broken on this chart. And the earnings gap that's there. This is essentially a falling wedge. And if you just Google falling wedge, you can see once you break out of a falling wedge, it could be a new opportunity for even higher highs. So right now you have lower highs. You could see higher highs going into that. So it's a good chart. Again, find your system, find the way that you want to do things. Here's the largest stocks by market cap so far in 2024. Okay? There's only one red, and that's Tesla, and it's only down 2%. So I would argue big gets bigger. Big gets bigger. I mean, look at CAT yesterday. CAT had a 6% gain, and it's going probably to new all-time highs again. But again, bigger gets bigger. Let's take a look at the Tesla chart, because does this have an opportunity? We'll take a look at Tesla overall. It's down 0.62. You're at 242. We talked about earnings gap on Google. Look at what filled yesterday. Okay? Your high was 244.24. This gap is at 245. It could reject off there. Okay, I do say that the 260 level is resistance. How did I get that resistance level? Look at the weekly. Okay, look at the weekly. And if we just put 260 right here, you'll see a line. If I just go to 260, okay, right there, what do you see? You see one where it was used to bounce back up. You see two where it was used to kind of break through, but it failed to hold. And then it went down. You see three where it bounced back up and then failed to hold. Bounced back up, failed to hold. Bounced back up, failed to hold. Bounced back up, failed to hold. Are we going to bounce back up and fail to hold again? Maybe. Let's look at the valuation of Tesla. It's the only one of those large cap stocks that's down year to date, and it's down 2%. When you go and look at the valuation, we talked about how Apple was too expensive at 30 times earnings. This is 104 times earnings. I did have a buddy use my referral code, and if you want my referral code, I think it's up here. I probably have to put it up here. I'll put it on the link tree today. But if you're going to buy a Tesla, you can do that. But this is 104 times future earnings, okay? And their growth isn't that great. The PEG ratio is up at 6 and 7. Now, they have a big catalyst coming up with the robotaxi stuff in October. They do. But is that something that you're going to bet on? Their earnings are coming up October 14th. And their robotaxi is somewhere around that time too. I would argue you've had a good run on this 4-hour algorithm. I would argue that gap is probably going to provide some resistance. And are you going to hold on between 240 and 260? I'd rather see you sell at the 260 mark or sell here and just get rid of it. Just get rid of it at that 260 mark and then buy at 270 if it holds there. You can always buy it back. This one is a far better trade than it is a hold, okay? On the 4-hour algorithm, it makes you 157% versus losing 16% over 2 years, 24 and a half months. You have 23 positions, so it's not like you trade all the time on this. It's 23 positions. It's once a month. That's the 4-hour algorithm. How do you get the 4-hour algorithm? You say, well, I see those entries and exits. How do I view that? You get Trendspider through my link here on Linktree, the top one. Okay, it's $53 a month. You basically go over here, you sign up for Trendspider, send me your account information, which includes the email address that you signed up with. Email me. The email is right up here in the upper right. And you can email me a screenshot of your account information, and I'll send you the link so you can import everything. It's as simple as that. It's super, super simple. So, again, big cap, I think big gets bigger. Look at those year-to-date performance. Apple's up 18%, Microsoft up 16%. NVIDIA, even though it's stuck between 100 and 120, it's up 140% year-to-date. Google's up 16%. Amazon's up 24%. Facebook, which we talked is at an all-time high, 58% year-to-date. Taiwan Semi, 69%. Eli Lilly's up 56%. You're in a GLP-1 and an AI market. Okay? Let's talk about something that might get the rate cuts going or might go up with the rate cuts. Well, the ARKK, it's rate-sensitive names. First, let's go look at the chart because the Trendspider saying this one looks like it's a breakout. I would argue you broke out at 44. The algorithm got you in at 44. The algorithm makes you 17% over 24 months. If you bought and held this one for 24 months, you're up 11%. Kathy Woods may be 2018, but I'd argue, I think her stock picking is still good. We can go over and we can look at ARKK. And if you look at their holdings, number 1's Tesla, number 2, Roku, number 3, Roblox, number 4, Coinbase, number 5, Block, number 6, Robinhood. Take a look at that. These are rate-sensitive names. Tesla is a rate-sensitive name. Roku, rate-sensitive name. Roblox, rate-sensitive name. Coinbase, as the rates lower, people want to get into crypto and be more risky. So, again, you have to find these names that are out there. ARKK might be something you look to. Because if you look at a weekly on this one, it just looks like it's kind of, floundering around that 45 range. Now, the 200 days all the way up at 67. So you may have a huge mark up here. Your MACD is right on the oscillator. Your RSI, 54 in no man's land. Doesn't give me any indication. But the 50 days moving a little bit positive. The 9 and the 21, those Bollinger Bands are as tight as they've been on this screen. Okay? The only other time it was tighter was here, October 2021, where it began that huge downturn. I don't think it's overly priced. I think it's fairly priced. But if you think that we're going to go in there, this might be a good one. Again, it's squeezing on, what's this? This is the squeeze. This is their indicator, the squeeze. Squeezing, which typically means up. So Wells Fargo, value equity list, stocks with potential that trade at a discount. They went by sector and they give you ideas. Okay. Verizon, PE 9.5. Okay. Walt Disney, PE 18. We talked about how there's a ton of expensive stocks out here. These are very cheap. Halliburton, 9. Exxon, 13.9. Financials, Chubb. Citigroup at 9.5. That's their PE. JP Morgan at 12.8. Principal Financial Group at 10.5. Healthcare. You can see CVS Group at 8.4. Gilead, 12.8. Industrials, Emerson Electric, 17.9. Honeywell, 19.3. Remember that the S&P trades at an average, I think it's 17 or 19, somewhere in that neighborhood. Use AI, Google it, and take a look. Okay, there are tons of opportunities in this market. You've just got to find them, and you've got to have a good system to look for. The scans that I do every morning on here live on YouTube, I find them for you. I use the 4-hour algorithm. So find a process that works for you. That's the key, okay? Here's Steve Burns, an education portion. He says 90% of traders are unprofitable because, 1, fear destroys their ability to let winners run. We talk about it all the time. If you don't let your winners run, you're not going to find those. You're not going to. Your account will stall. Greed destroys their ability to position size correctly. We talked about it yesterday. How greed got somebody into Micron. And how they weren't able to pull the trigger as it started to come down. And they just got larger and larger losses. Their ego destroys their emotional control. Charts don't have emotions. You do. So when you decide to stay in, but the algorithm's telling you to get out, and then the algorithm's right, and you don't get out when you realize that the algorithm's right, get out. Trading is 80% psychology. So... And remember, if you ever want to just look at stuff, okay, YouTube is such a good resource. This is a very simple MACD scalping strategy. I use the MACD in my algorithm. Full disclosure, MACD, it's based on MACD. And the reason is because I backtested on the MACD. I found other channels that backtested even longer on the MACD. In my mind, it's the one indicator that backtests the best. And so you can find a ton of MACD strategies. Just make sure you're trying one and make sure that your charting program has the ability to backtest. And if it doesn't, sign up for Trendspider. Trendspider has the ability. You could go into Trendspider and literally use ChatGPT to write a strategy. You can go in, watch this video, and then type in that strategy using ChatGPT in Trendspider and build that strategy for yourself without even knowing much at all. You don't need to know the actual strategy or what the MACD stands for. You just have to know what the entry is and what the exit is. And so it's very simple. But again, Trendspider makes it super, super easy because just go over and look at some of Trendspider's YouTube stuff. If you just go over here and go Trendspider and look up their channel, you can go and look at it right here. You can find the CanSlim stuff. You can find their popular video, fair value gaps, the strat using MA clouds, Trendspider webinar, explore the strat, ultimate macro. You can find all of this stuff. Trendspider shorts, how to use Trendspider updates, all of this stuff. It's all in there. Even live charting with Jason. Jason's fantastic on this stuff. And you can use their Twitter. You can use their Discord. Again, Trendspider is the deal, but just have a strategy. Okay, so social requests. Dan Prior from LinkedIn. Hi, Gary. I'm thinking about adding SMCI to my retirement account after the split on October 1st. He wants to long-term buy and hold. I've never held this stock before, and I wonder if you are still optimistic on SMCI after the recent news regarding their account strategies. Appreciate the knowledge, blah, blah, blah. Okay, so here's my thoughts on SMCI. You have to wait until they get that new financial disclosure. I think it's a 10K. I forget which form it is. You have to wait until they actually submit it. Okay, right now, you're in a downtrend. See that red line right there? You're in a downtrend. You're having lower highs and you're having lower lows. It's not a good time to add it. I don't care that the split's happening. I don't care what it says. The valuation is in question. And with an accounting scandal, the valuation is in question. I am not somebody who's going to double down on this like James Ford is. James Ford, I've done an interview with him on his YouTube channel. I like James Ford. He's doubling down on it. He gives you all of the time, all of the reasons why. He's a great investor. I think he's a great investor. I mean, he has his fundamentals solid. But for me, I'm not. The valuation makes sense right now. We talked about the PE of Apple being 33. This is 13 times forward earnings. It's not crazy. The only thing that brought them down was the margins last time. It's 14%. The typical sector is at 49%. They were getting rave reviews at 29%. But again, the valuation was brought down. It's a hold in the quant. Am I looking, I'm playing, and I've said this many times, Dan, I am looking at this one as something I am playing with house money. I am 100% profits in this one in my account. I am not looking at this one as, oh my God, I've got to add to it because it's a 440 and the average price target on Wall Street, let's just look at the Wall Street price target, it's 783. Okay, that's 78% upside. I'm not looking at it that way. I'm looking at it like, okay, I hold it in my portfolio, but it's 100% profits. If it goes to zero, I didn't lose any of my capital. My capital is invested somewhere else. So do I suggest that you get into this one? That might be a tough suggest, especially, the 10-for-1 split. Splits used to mean something. Today, I don't think it means anything other than it'll go to $44. Today it's trading at $440. It'll go to $44. Before you had fractional shares, that meant something. That meant a lot more people could actually buy it. But right now, I just don't think that it has a lot of, oh my God, I've got to get it. Look, you're in a downtrend. This is a weekly chart. Now, your MACD has reset. Your RSI is back at 39. But if this is an accounting scandal, that doesn't matter. Because the reality is, if they have to restate some of their earnings, you're going to see this back down at $200. And I'd rather wait for you to see that, see the accounting stuff and miss out on the first 10% than to get in here and try and time it, especially around something like a split, which is meaningless. They tried to basically do what NVIDIA did to boost their stock, do what Tesla did to boost their stock, do what Apple does to boost their stock. It's just, it's nothing. Now let's talk about some scans. Like I said, I scan every morning to find opportunities. Now Apple's at 229. It gets you in at 229. We're trading at 230. Okay. The market has opened up. We're trading at 230. I don't think you buy at 230. You have to see it hold 230 before you buy at 230. We want that 230 to not be resistance. We want it to be support, and you have to hold it up there. Right now, we don't see a retest where it bounces off and comes back up. Okay, what you see is a retest and it breaks right through. You see a retest and it breaks right through. When you look at a weekly, you can see it's just not holding it. It's using it as its top, as its resistance. And the MACD is super high. It's crossing down. I would say that we have more downside on this one. But you have a huge catalyst in the iPhone 16 launch. And you have a T-Mobile coming out and saying they're selling gangbusters. A stock like Boeing. We have another weekly 4-hour cross up here at 156. It just got you out of this one at 162. Gets you back in at 156. I would say there's too many issues with this one. One that I do like, and I think it's a long-term is Berkshire. Is it too expensive? I don't think so. Warren knows what he's doing. Warren knows what he's doing. When you look at the valuation of this, the PE 23. It's not crazy. It's a little bit high historically. We can go and look at the charting of it. Let's select the metrics and we'll go to, valuation. And we'll look at PE. And let's just look at the last 5 years of the PE of this one. A little high. Not crazy. It's not, way back here at 100. That's probably a glitch of some kind. But 10 years, it's not crazy. It's not nuts. It's kind of average. So I like this one. If you trade this one, the algorithm makes you 19%. If you buy and hold, you make 64%. I like to buy and hold this stock. Ross Stores is one that came up with a cross up. ROST. Again, the lower end consumer. We talk. TJ Maxx is one that has just been going gangbusters. Ross Stores. The algorithm makes you 56%. Buying and holding this one makes you 70%. I would say, for me, Ross Stores isn't something that I shop at. I'd much rather trade it. And I'm happy making 56% over 2 years. 25 positions just got you in right here at 155. You're trading at 153. MACD super low. RSI 55. If we go and we look at the weekly on this one, might be a little bit extended. Maybe not. Last time it was up at this area, the MACD was 7 points above the oscillator. Now it's 4 points above the oscillator. Last time it was up in this area, the RSI was at 70. Right now it's at 60. Maybe you got some moves in this. Take-Two Interactive is another one. TTWO. This one came up on a scan as well. When we take a look at this, 155 is the buy-in. You got a gap below here, an earnings gap up. During their last earnings, their earnings aren't coming up till November. You just had a golden cross here where the 50-day crossed up. You're using that 200-day as a support. Yeah, you're trading at 152. This got you in at 155. Algorithm makes you 12%. Buying and holding makes you 22%. It's 27 positions over 24 months. When you take a look at a weekly on this one, the MACD right along there. It's trading right along the 200-day. If you're playing video games, maybe Take-Two is your thing. But again, make sure you have some type of system in place. There are opportunities in the market, whether it's value, whether it's charting, MACD, whether it's the Mag 7, whether it's an ETF like ARKK, whether it's just Finviz and using a stock screener. Make sure you've got an opportunity to find these things, understand these things, and look at them. And again, Fridays meant for just a summary. So this is just my look. Again, if you didn't listen to the spaces, here's the summary of what I've said. I said, I think bigger gets big, big gets bigger. I think that we're in a situation where we don't know what the Fed rate cuts are going to do. I was worried that yesterday's reaction didn't come on Wednesday during the actual reduction of rates. Why did it wait a day? Was it because the unemployment numbers came out? Was it some type of retail sales data that really pushed it? I was worried. I don't think it was just the rate cuts. I think it was euphoria. I think overnight some big money came in from overseas, and I also think that some of the big money that came over was pouring into some of those ETFs. I don't think they're doing single stocks. You can't tell me the Saudis are pouring money into Palantir at the price point that it's at. You can't tell me they're doing something. They're putting it into basic ETFs. Now, there was another discussion where the Japan trade might unwind still. I also think that the VIX wants to be at 20. And I think we're heading into a seasonal period. I've said it before. For the last month, I've said patience, patience, patience. And I have pulled 5% of my money out. I haven't put it back in. Next week, I'm probably putting it back in. Do I think we have an October pullback like we had the past 2 years? Maybe. Am I worried about it? No. I want to buy Qs between 450 and 500. I think big gets bigger. That's my take on it. But again, I could be wrong. Remember, don't listen to douche on the internet. That's the number one rule. Number two rule is don't listen to Jim Cramer. He just called Palantir a joke at like 30. We're at 36 now. Okay, 20% up since he called it a joke. Whatever. Douche. But number one rule, again, don't listen to a douche on the internet. Do your own research. Number two rule, don't listen to Jim Cramer. If you have any questions, hit me up. And remember, there is there's a bundle offer going on here for Seeking Alpha Premium and Alpha Picks, $639 for the pair. I'll put it in the newsletter, and it's only in the newsletter. It's not on the link tree. If you want to just click on them individually, you can, but it's in the newsletter. The other thing, you saw me use the quant. You saw me use the valuation. You saw me use the growth. That's the quant in Seeking Alpha Premium. To lock in your the price increase to $299 on October 1st. Okay, to lock in your price now. I think it's at, let's see, it's at $214 a year. Again, $214 a year. Lock it in 10 days. October 1st, it goes up. And if none of this makes, if you've listened to all this and you say, you know what, I'm confused. I'm new to this. I don't want anything about this. Alpha Picks might be the way to go. Alpha Picks is a data-driven portfolio. Okay, and the reason I like it is because of the performance. I think it's like 21 stocks, somewhere in that neighborhood. You get access to those stocks on day one. It gives you the percentage of the portfolio on day one. So if you want to build your portfolio, say you have $10,000 and you want to just build the Alpha Picks portfolio, you can do it by buying fractional shares of all of these stocks based on the percentage that they give you. The performance, 114% during the same time period. The S&P's up 38%. It's 2 stocks a month, one on the 1st, one on the 15th. They tell you when to sell. They just had a bunch of sales, of stocks. They tell you, and it's when it gets out of that quant. So if you don't want to do your own research with Seeking Alpha Premium and you just want some ideas, Alpha Picks is the way to go. And again, I only sell Trendspider, Alpha Picks, and Seeking Alpha Premium. My Webull account there, it's great. I'm at $8,500. I put $1,000 in. It's my sports betting stuff. I go YOLO on TQQQ, SQQQ. I went on MicroStrategy. I went on iBit. I went YOLO on NVIDIA in there. I've got a fairly good portfolio in there. I think I've got Meta. I've got Apple in there. But yeah, it's just one of those that I don't care if I go to zero. I'm still not doing options in there, but I'm loading up on little stuff every now and then when I see a chart that I like. But it's like I'm sitting on my couch and I'm going to do that. It's not ones that I'm, I am holding for a longer period than I would be comfortable with. But in reality, I'm doing okay. It's just luck. That's just a trading account. There is no way I would trade my big account the way that I do my Webull account. And it's taken the place of my sports betting because I'm just that much better. I'll put my my Tesla referral in here as well because that's back up. I just had a buddy order a Tesla. The Daily Stock Bank newsletter is in there, visible if you want $20 off your first month of cell phone service. It's great. I use AT&T at home Giga service. Savvy Trader. If you haven't seen my Savvy Trader core portfolio, this is the one that's beating the S&P year to date. You look at SPY. SPY is up, let's see, 18% year to date. 20% year to date. This one's up 32%. It's just 35 names, equal weight, 100 shares of each. SMCI, when it goes 10 for 1, I'm going to have to sell, 900 shares? Just like I did sell 900 shares of NVIDIA. It's $1 million portfolio. But you could just buy, say you have $10,000, you could just buy the fractional equivalent of each one of these. And again, it beats the S&P, but I wouldn't suggest it. Pick your top 5 names of something like this. But again, have a plan, and that's the key. Okay, have a great weekend. Let's hope goats' anuses don't blow up. Happy Gotcha Day, Penny. And I will talk to you guys later. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.